on with our tariff theme. Our next guest views America's 20% tariff rate on the Philippines as a signal for a more assertive and self-reliant trade strategy. With us now for more is Sonny Africa, the Executive Director of think tank IBON Foundation. So good to see you again, Sonny. Welcome back to the program.
Hi, morning, Kathy. How are you doing?
Good, thanks. So how should our trade negotiators then re-engage when they go to D.C.?
Well, I think they're off to a wrong foot. They started off on the wrong foot by saying that everything's on the table, including a new free trade agreement. I think that comes from a misunderstanding of how bad free trade agreements have been for the Philippines over the last, maybe 20, 30 years. So I think the best posture would have been starting off from a position that the Philippines is not, just accepting U.S. tariffs. The U.S. will be asserting its sovereignty. In particular, the Philippines is not going to just accept what the U.S. is pushing. I think the important thing that the Philippine government should have been done from the very start, say that that tariffs are unacceptable, they are discriminatory against the Philippines, and the Philippines will be asserting its sovereignty to pursue a more protectionist industrial policy.
But we're not at the start here. We're nearing the end, Sonny. How much of a leverage have we lost?
Unfortunately, we've lost a lot of leverage already by that statement by Secretaries Go and Roque that all things are on the table, including a free trade agreement. I think the Philippines will always have limited leverage if it confines itself to existing unequal trade relations with the U.S. Maybe the better posture would have been getting real leverage from asserting the national interest, building alliances with other countries, for instance, Southeast Asia, instead of giving up even before the negotiations start, instead of giving up what little we have. And I think that, honestly, that idea that they're telegraphing that all things are on the table and that we're keen on an FTA and that we're willing to open up completely to the U.S., I think that goes against the national interest. And in particular, that goes against the Philippine experience. We have had about a dozen FTAs, apart from the World Trade Organization agreements in the 1990s. These have caused Philippine industry to fall to its smallest share of the economy in 75 years. And I think that attitude, I think, should be corrected. We need a much more broader, more complete understanding of trade rather than the narrow textbook notion of comparative advantage.
All right, so what's the low-hanging fruit here? I mean, we've got those free trade agreements, and as you say, they're not working for us, but we can, presuming that we do still have the time and have the leverage, we should. But how?
Yeah. The danger in trying to seek the low-hanging fruits is that will bias towards looking for tariff cuts because of any short-term export gains. But exactly the problem is the low-hanging fruit might hide the fact that the trade-off for the low-hanging fruit, again, lower tariffs on whatever we're exporting right now, Coach handbags or fruit juices or coconut oil, if the trade-off is constraining the Philippines from pursuing industrialization policy, the long-term costs are really offsetting the short-term gains from the low-hanging fruit. And I think that's so important to start from that perspective, because the really low-hanging fruit should be we are able, especially with the Philippine president going to the U.S. In a couple of weeks, we are actually in a position to assert publicly that we are taking on a more assertive trade posture. I think that is the low-hanging fruit, because the Philippines can start with President Marcos's trip next week. He can sort of, undertake a months-long campaign until the ASEAN chairmanship next year for the ASEAN to stand up to the U.S.'s bullying.
Speaking of the ASEAN, prior to 20%, we were talking about the potential trade diversion. Is the prospect of that trade diversion to the Philippines now all gone? With Vietnam's 46% coming down to 20%, matching ours, which went up from 17%.
Actually, we noticed that the Vietnam deal that Trump has announced doesn't seem to be final yet. There's no formal paperwork about the supposed cut of 26 percentage points by Vietnam. I know Vietnam, I've heard from some friends, some diplomat friends, they're pushing back against some of the non-economic impositions that the U.S. government is asking. And apparently, that announcement by Trump that there's a deal with Vietnam for the lowering from 46 to 20%, apparently that's not been formalized yet with Vietnam. Having said that, I think trade diversion benefits will always be difficult for the Philippines precisely because we have not actually created the industrial base to benefit from any sort of trade diversion. It's easy to talk about in general terms, climb the value chain, take advantage of diversifying our opportunities, take advantage of trade diversion. But if over the last 40 years, we've limited our industrial base to what foreigners want to put here, that actually limits our capacity to benefit from any sort of trade diversion.
Yeah, lots of variables there throughout many decades past, and not only now, but one constant had been the consumer base, the local purchasing power, and how that's holding up so far at the level of inflation we're on at 59-month lows. Could that be a silver lining as the trade talks continue?
Actually, that's an excellent point. We have to remember the main weapon, the main leverage Trump has in using his, super blunt hyper tariff policy is the fact that the U.S. accounts for about 35% of the global consumer market. I think that's exactly where the Philippines should be taking its lead. We will have more leverage talking to anyone, including the U.S., if we actually had stronger purchasing power and the bigger domestic market from that. Because again, the US does want to sell stuff to the rest of the world, including the Philippines. So I think right now, one low-hanging fruit, if we're talking about that, one thing the Philippine government can do, expand the domestic market with high wages and actually use that as an additional point of leverage in transactions with the US. We can open up our economy to you, but if no one has any money to buy what you're offering, you're not actually going to get very much. But I think, again, case in point, we can increase our leverage by increasing domestic purchasing power. There's so many things that need to be done for that, including job creation. But the low-hanging fruit, I think, is a meaningful wage hike to expand immediately wages among our wage and salary workers.
And that empowers us, buy local, in short. Thank you so much. Sonny Africa of IBON Foundation. Appreciate your insights, as always.